Hello, nice to meet you. Today I have a very special guest with me. Today I have Elliot on RichgoTV. Nice to meet you. Yes, nice to meet you. Our connection with Elliot is quite deep. We had a connection 3 years ago, and I also watch El Niño's YouTube channel regularly. Additionally, there is the second book that has been out for 2 months. Could you please introduce our guest briefly?
Well, I come from a securities background and retired a bit early. I started my YouTube channel in 2021 after publishing this book, realizing that I needed to inform people about the very risky situation. I wanted to show the investment process, whether it's stock investment or something else, in real time. The main motivation for starting my YouTube channel was to warn young people about the risks involved.
I am Elliot, and I recently published my second book at the end of July, about a month ago. Nice to meet you. No matter what we do, I believe that authenticity and skill are very important. It's not enough to have just authenticity or just skill. I think a valuable person is someone who possesses both. Personally, as I watch the content of our Elliot's book and his broadcasts on YouTube, I feel that regardless of whether we are right or wrong, when I hear people talk about their stealthy experiences, I can really sense whether they are speaking solely for themselves or if they are doing it for others who have seen my videos or read my books. So, I find that our Elliot is very cheerful and makes great jokes on YouTube. Additionally, I was personally amazed by the charts he created known as the L charts, which are truly incredible. But how did he do it?
I wonder if an individual can do this. For over 20 years, I primarily used Excel, and to analyze Elliott waves, long-term data is necessary. So, I was using Excel from the time I was the owner of a securities firm until my retirement as a manager. I remember it was around 2019 when I happened to attend a lecture before Kim Ki-hyun, the CEO of Richgo, came out. I think I paid about 80,000 won for it and attended for about 2 hours, probably in Gangnam. There was a time when I briefly had a cup of coffee and thought, I should create charts like that too. I didn't want to do it in Excel, but rather freely, like how you would use a securities firm's HTS at home, looking at monthly and weekly charts. I wanted to try that, and since Richgo has been doing really well recently. Yes, so I benchmarked and started using some of my personal funds. Since the beginning of this year, entrusting them to an expert, I thought it would be quite useful from the user's perspective as well, so I created it that way. Also, my connection with Kim Ki-hyun goes back to 3 years ago, in 2021, when I appeared on Money Today, right? Yes. I was there discussing the 3 major theories of market collapse. Let's adjust it, and then when we receive the award, please show the card number 1. This is it. Ah, yes, but the video, this is the intro. Bridge that I captured. Yes, I first claimed that the bean sprouts would improve, and I received a committee enhancement. Representative Kim Ki-hyun matched the timing even better than I did. I thought it would be around May or June, but he said it would be in October, and I thought it wouldn't be that late. But looking back, Representative Kim Ki-hyun was right, so I was a bit ahead in my claim.
I may be a bit ahead of others, but the truth is that Kim Ki-hyun is more accurate, so it makes sense that he would create Richgo. It's not about whether it's 1 month or 2 months. What's important is that real estate is, in a way, like an aircraft carrier. It moves very slowly, and in fact escaping from it isn't easy. I have acquaintances who have put their apartments on the market, but they aren't selling. The media is completely different from reality. That's why I always say that you should sell real estate when it goes up. That's right, we've been talking a lot about this. Now, our Elliot has published his second book this time, that's correct. The title of the book is 2025 South Korea Apartment, The Price Crash Begins. He published his first book at the end of 2020, right? Then in 2021, there was a peak, and in 2020, there was a significant crash. Now he has published another book, and I think we can't avoid discussing it. First of all, in the first book, he mentioned that the peak for South Korean apartments would come in 2021, right? And in terms of Korean real estate, whether it's the actual transaction price index or Elliot's charts, it was the peak on the 21st. Of course, in some areas, there are apartments that have gone slightly above the peak of 2021, but overall, October 2021 was the highest point, right? However, at that time, we couldn't mention it, and everyone was saying that prices would skyrocket. We kept shouting that there would be a surge until the first half of 2022. But in a way, being from a securities background, how could it be that the peak was in 2021?
I was really curious if it would rise like this. It hit the bottom in 2013, and since then it has been on the rise. So by 2021, it would be the 9th year of increase. Even if it rises for one more year, from the perspective of someone who bought in, they would have to wait 2 years to sell. So if it goes up 100 million won in 1 year and then drops 300 million won over the next 2 years, that would be a huge loss. Also, leveraging everything to invest was really risky, because while those with money can hold on, those who are heavily leveraged face forced selling. So if you listen, there are a lot of auctions happening right now, right? Yes. So I have been researching Elliott Wave for a long time. However, I was surprised to see that it applies not only to stocks, but also to sold apartments. I was so amazed that I couldn't even tell anyone, which is why I wrote it down in Chinese characters and even used the term Tong Dang Lun, Tong Dang Ron. I wanted to make a stronger appeal. And just as a side note, I want to mention that in the case of our friend El Nino, we are talking about it. It's also important to have consistency between words and actions. From what I understand, you sold your apartment in Seoul at a good price. You sold it and still haven't bought anything else. So, I'm currently living in a rented place without owning a home. This means you're not just talking, you're actually managing your assets. This way, some people might say, did you sell your house because you want to crash? That's not it. Based on my analysis, I believe the market will decline for the next 8 years. So if it drops for about a year, or maybe 1 to 2 years, then what? If we talk about the cost of selling and selling, losing 200 million a day, it doesn't mean much, right? But it seems like it's not just a small drop, it looks like it could drop significantly. So, I was thinking about whether to buy during this rebound, and after buying, what if it goes up for a year and then drops for 4 years? That's something to consider. Now, if I briefly mention the data, the decline doesn't start in 2021, it actually begins in 2011. Even if it hits a peak, it won't drop sharply in a V shape, it will be a slow decline. It's about falling and then experiencing a sharp decline later. Similarly, I wanted to write 2024 in the book because that's when it starts. I see it happening in October, this October. Yes, it could be as late as December, but it could also be earlier than October. I wanted to say 2024 instead of 2025 because I remembered the timing from the previous book, so I thought it would be better to set it a bit later. Also, the book needs to sell next year, but even if we assume that 2024 is correct, people aren't buying in 2025. That's impressive. Just a bit of a joke there. Now, I think this chart is the main chart. The first apartment in our country was the Central Apartment in 1958, after the liberation, located in front of Korea University. That's why I started counting waves from 1958. However, at that time, apartments were only about 1% of the market. So, before 15 years ago, housing prices were just housing prices, and this data was obtained from the Federal Reserve. In fact, the actual transaction price index is 80, starting from the year 2006. The previous data was gathered from sources like KB or real estate sites such as Real Estate 114, compiling the median prices of individual apartment sizes and treating that as the actual transaction price. So, while the Oriental Index and the real estate agency we announce every Thursday are aggregated, I created an index using individual apartments. This makes it more precise. While studying this wave, for example, in May 1987, when the rise of Rote-Woo began, I placed this low point as T1 and the IMF crisis in 1998 as P2. With these 2 points, you can listen carefully and create a first-degree equation. And what was created here is this. This is the function that was made, so it wasn't just drawn with a stick or with a mouse. Using Excel to calculate function values, we find the 3-wave value. In the log chart, we use an exponential function, and if you look closely, you can see it closing here. Let's take a closer look. The wave started in May 1987, which is also referred to as P1, and in November 1998, we call it P2. I created a function like this, and if you draw it out, can you see how it gradually progresses? In the beginning, for the first 13 or 14 years, it rose slowly, but then it started to spike from here. This is amazing. Another point is that 1961 was a peak year. From 1961, 30 years later, it would be 1991. From 1991, 30 years later, it would be 2021, which is 30 years. And the reason people went crazy and invested heavily in 2020 and 2021 is that during the Japanese colonial period in our country, I was 10 years old. If the annexation we experienced in 2010 had occurred, then when that child turns 40, it would be 30 years later. If the same phenomenon repeated itself for 30 years from the time the child was 10 until they turned 40, I believe that phenomenon would continue indefinitely. Therefore, while there were many anti-Japanese independence movements in the 1910s and 1920s, as we moved into the 20s and 30s, those movements began to disappear. Now, all the investments have gone to places like Manju. So, After 30 years since 1987, when we reach 2017, people will start to solidify the belief that apartment prices will rise forever. This is related to psychology. Just like during the 35 years of Japanese colonial rule, there will be a fixed notion that the phenomenon of sole apartments will repeat itself every 30 years. But that is not the case. One thing that breaks without exception is, let me mention it in advance, the charts. This is the case not only at this time, but also primarily with housing. If we look at housing during this period, we see that in October 1966, January 1975, and August 1982, there were leftist directives. If we consider stocks, this would be the support line. Another point is in 1961, and then in 1979, when President Park Chung-hee was assassinated, and in 1983, we can see a precise rebound and a pivot. This is all happening within this framework. So until 1979, from 1958, this forms a gigantic pattern. It's similar. After this adjustment, starting from 1987, there was an upward trend, which corresponds to the factions of Roh Tae-woo, Kim Young-sam, Roh Moo-hyun, Lee Myung-bak, and Moon Jae-in. If I briefly mention this in terms of Elliott waves, the Elliott wave consists of 5 upward movements and a downward movement. Within this, there are also 1, 2, 3, 4, 5, and here we have ABC. Recently, while Kim Ki-hyun was broadcasting, he mentioned that the real estate market in Seoul peaked in 2021 and then fell, forming an ABC pattern. While discussing the rise, he mentioned the possibility of further declines. While everyone else says it will surpass the previous peak, from an Elliott wave perspective, this rebound is a corrective wave. It resembles the brief rebounds that occur during a decline, known as a Minsky moment. This is what we call a dead cat bounce, which often appears before a major crash. We refer to all of this as a stock market rising model. It's similar to the brief recovery of an old man who suddenly stands up before dying. However, this rebound consists of 3 waves. The corrective wave is 5 parts, 1, 2, 3, 4, 5, and ABC for the B wave, which is a rebound wave. This indicates that the 20 wave is nearing its end. Therefore, I titled my second book, The Rebound B Wave is Coming to an End. Now, the descending wave is what we call the killer wave, which is extremely frightening. It suggests that something scarier than the current decline could occur, which aligns with what I believe. Many people think there won't be such a decline, and they foolishly believe that January 2023 was the first bottom. For now, that's how it is. However, it could be that a larger decline is coming compared to that time. The duration will also be longer, and one interesting fact is that the peak was in 1991 and again in 2006. Now, when the bubble bursts, this is what we can expect. The chart shows the real values of the top 100 apartments by market capitalization, adjusted for inflation using the CPI. This adjustment is made to slightly correct for inflation in order to provide a clearer picture of the strongest assets. In my opinion, this is the most accurate among various indicators for Seoul apartments. It's like this: rather than having 1500 rings, it's calculated considering the inflation rate, whether it's an overshoot or an undershoot compared to that, right? When it rises, it goes up much more than the inflation rate, and during this rebound, it barely rises to the level of being expensive compared to the inflation rate. But if you look at it, the peak was in 1991 and again in 2006. So 15 years from here would be 2021, right? And then here, the low point was in 1998, and 2010 was also a low point after 13 years. This is also 15 years. So 15 years, 15 years, 15 years means that 15 years after 2013 will be 2028. Therefore, I want to talk about the combination of the 8-year cycle and the 15-year cycle. This is a mathematical analysis of trends. And if we apply Elliott's wave theory to this, it looks like this, as I mentioned earlier. Until 2019, this was the rising grand supercycle, and after the adjustment phase, we saw the rise of Roh Tae-woo. So, this is the grand supercycle's 3rd wave. This has now ended. People tend to think of the adjustment phases during Kim Young-sam's 8-year adjustment, or Lee Myung-bak's 6-year adjustment, but I mentioned in my book 3 years ago that this time is not at that level. This is an adjustment phase related to the grand pink wave. There can be no comparison with this. So, the corrective wave in Elliott's wave theory is a retracement of the previous upward wave. We consider whether it has fallen sideways compared to the peak, but that does not exist in Elliott's wave theory. It is about how much percentage it retraced from the previous rise. 38.2%, 61.8%. Fibonacci levels are continuously used. Therefore, the corrective waves of Kim Young-sam or Lee Myung-bak are retracements of the preceding upward waves, but there is no retracement for this wave. The wave has ended.
So, after a long upward wave, a major downward wave is starting now. Previously, we were talking about a correction after an 8-year rise, but this is a correction after 34 years. This time, it could be larger than the 8 years. I have set my sights on 8 years, referring to 2028 or 2029. When I give lectures, I usually talk about how I see things starting from 2021. In the past, Korea was in a period of growth. Following that, there was a globally peaceful era. During that time, prices stabilized and real estate continued to rise. However, since 2021, we have entered a period of contraction, not growth in Korea. This is due to low birth rates and an aging population, and now countries are fighting against each other globally. As a result, prices are significantly higher than before, and because we are in a period of contraction, I believe the landscape of the real estate market will completely change in the future.
Oh, at that moment, I felt a bit of a chill down my spine. That's why I quickly wanted to show you this chart. What this shows is that the Kospi peaked on June 25, 2021, the day the war broke out, at 3316, and the Seoul apartment market peaked in October of the same year. So, it was the same year. But at that time, what happened was, as I just mentioned, after the rise ended, a contraction began. That black line you see represents the proportion of the working age population. 2021 was the peak. This is exactly the same content as what was in the book I published 3 years ago. The data hasn't changed at all since then. This is all based on projections from the Statistics Office. The red line represents the actual index of Seoul apartments. It peaked in October 2021. Seoul apartments peaked in June, and they still haven't surpassed that high point. Meanwhile, the proportion of the potential working population is expected to continue decreasing. This means that it's not the population itself that's decreasing, but rather the proportion. This phenomenon, and now our debt ratio is extremely high, right? When there was a global loss phenomenon, both household credit and corporate credit exceeded 100%. Combined, it was over 200%. At that time, Spain collapsed, the United States collapsed, and Japan also collapsed. Yes, I will show you that in a chart. Originally, I noticed that this content was missing earlier, so if you look at this is Korea, or rather Japan. This is a Japanese product from 30 years ago. This is from 15 years ago. So based on 2021, it refers to the year 2016 in the United States. And this is Spain. If you look at Europe, Japan's potential working population peaked just before the Nikkei started at 1 million yen and 3,000 yen, which was in 1991. This is 30 years before us. In 2021, which means 1991. At that time, household debt, in relation to GDP, was less than 60 to 70%. But corporate debt, the debt is at 147%, so combined, it exceeds 200%. Here, we see that it goes over 200%. This is when the last 20 years began. Then, looking at the United States, corporate debt wasn't that high, but personal debt reached 100%. During this time, subprime loans were given to people who were not qualified, household debt increased significantly, and at that point, the trust index for the market plummeted. After about a year or two, production decreased significantly. It's almost in a similar state, but Spain is serious. If you look at the PIGS, even at that time, household debt didn't exceed 100%. If you look at the figures here, it came out to about 85%, especially at the peak here. Corporate debt was 127%, so combined, it exceeds 200%. Meanwhile, the proportion of the working age population has sharply declined. As a result, they experienced a significant crash for about 6 to 7 years. So, let me summarize this.
The population is very important. When the working age population is growing, it's okay for debt to increase a bit. However, now that the working age population has nearly peaked, while debt continues to rise, if the combined debt of individuals and corporations exceeds 200%, it becomes very risky. Following that, real estate prices have significantly collapsed.
This has come up commonly. There are cases like Japan, where it takes 30 years or so, and there are cases like the United States or Spain, where it takes about 6 to 7 years. But let's compare this to our country. In South Korea, the population producing in 2021 is about 3%. This is when it starts to decline. In October of that year, Seoul apartments peaked, and 4 months earlier, the Kospi also peaked. The problem is that South Korea is more serious, because the second generation is one of the two. Only one of the two exceeded 100%. But in our country, both corporations and households have exceeded 200%. This is dangerous. It's not just the PF currency that's the problem. Our household debt is in serious trouble. It's chaotic. Just yesterday and today, there were news reports about how the structure has been breached. But if you look closely, the PF crisis has been lurking beneath the surface since a year ago. So, these two factors are dangerously intertwined right now. Additionally, there is data that is not included in this, which is the John's loans.
In fact, regarding Jeonse loans, on other days it's like this. If we add that, I understand that this personal household debt is about 150%. If we consider Jeonse as well, it actually comes to about 280%. So, I also look at various data like the Jeonse PIR and the index of Jeonse housing owners, and I believe that the Jonze market could still face issues in the future. Right now, the authorities are significantly reducing Jonze loans. I have one more question to ask. Do you remember 2022? Until June and July of 2020, what did 99% of real estate experts say? They said there was no supply of new apartments in Seoul, and that with the 2-year renewal of the lease law, the Jonze prices would skyrocket. I thought, what are they talking about? That can't happen. I was alone in that thought, but in reality, Jonze prices plummeted even more than sale prices. However, if you look at the supply of new apartments and such at that time, I don't think so. There was no crash at all. But if there was such a significant drop in rental prices, and if we are facing another major decline in 2025, I think a drop in rental prices could accompany that as well. I haven't thought that far ahead. So, I believe that elite waves are based on past data. This is a statistical technique that looks at Japan 30 years ago, the United States 15 years ago, and Spain.
And currently, as of 2021, there is a cycle that comes every 15 years. This is 1991. In 1991, we also experienced a rise. At that time, we fell together with Japan, but we rebounded after 8 years while Japan continued to decline. If we put this on one chart, we can see something amazing. I missed it. Wow, this is very complicated, and I've only done it a couple of times. It's complicated, right? So, what this is showing is the apartment prices. This is the apartment price, and this is the debt ratio. So this refers to private credit, which combines household and corporate credit. This represents the proportion of the working age population. This is the ratio compared to GDP, and this is the ratio compared to the total population. This truly reflects the real situation of the country. So, we finished with Japan 30 years ago, and with the United States and Spain 15 years ago, aligning them with the year 2021. Now, if you look at it, it's obvious. Since this matches here, it's natural that there is overlap. And of course, the problem is evident when you look at them. You all hit the peak in 2021, but household debt is still high, right? Other countries were the same. Hello? You hit the peak here, but debt continues to rise. That's right, there is inertia. So when will it change? So when the real estate market crashes, even if you don't want to, you'll have to sell your apartment. If one takes 70% and only gives me 30%, then naturally household debt decreases. This phenomenon has been observed in all 3 countries, not just ours. It's essentially forced liquidation. In stock terms, it's like a reverse transaction or a forced sell-off. Yes, so even if I don't want to, when the stock price drops by 100%, suddenly the credit volume decreases significantly. That's because it gets recouped. And if you look at this time, isn't the working age population almost the same? Just a 2-year difference? Korea, USA, Spain, Japan are all declining even now. But the question is whether it will decline for 20 years like Japan did, which I don't believe will happen. I see it this way. This is an 8-year period. If we consider this, we are looking at 2028. Spain has also rebounded, and although it hasn't reached its previous peak, the USA has rebounded while Japan continues to decline. The charts are in my book, so all the data I mentioned today is in the book.
At first glance, I thought, what on earth is this? But now that I've listened to what you said, I can finally see the chart. Hearing our Elliot's insights, I realize that in a way, the real estate and stock market are often analyzed using Elliott waves, and he has accurately combined this with the real estate market. In fact, if what he discusses in his second book is correct, it will almost be about real estate. It seems like you might become a god of charts, but I also have similar thoughts to our leader Elliot. What I think is that there is still a significant decline ahead. And while you mentioned that 2028 will be the bottom, I have a slightly different perspective. If we consider the gradual decline pattern that emerged after the financial crisis, then now it seems that the bottom could be around 27 or 28, but if there is a sharp decline like during the IMF crisis, then the price bubble could burst in an instant. At that time, the government would likely pour in massive stimulus measures again. Looking back at the IMF period, it took about a year to a year and a half for a major upward trend to begin again. I think there is a possibility of that happening, but what are your thoughts on that? Coincidentally, this chart has everything I want to discuss. And here is what Representative Kim Ki-hyun mentioned.
Now it has suddenly dropped. It hasn't even been a year. Then it rose to 8 years or 7 years. But for that to happen, look at this time. From here to here, it was said to have dropped for 8 years. Let me zoom in on this. First, if I explain this well, you can see the factions: Roh Tae-woo's faction, Kim Young-sam's faction, Roh Moo-hyun's faction, Kim Young-sam's fourth faction, Roh Moo-hyun's faction, and Moon Jae-in's faction. If you look at the waves within this, here is one. 2345 ABC, 1, 2, 3, 4, 5. ABC, 1, 2, 3, 4, 5. All reactions are perfectly aligned. It's as if someone is measuring a bag, meaning that even in a bull market, there are short periods of bear markets, and then there were quite a few rebounds even during the long bear market. If you look here, there was a 3-year decline followed by a 3-3-1. There was a long decline. If you look, it's May 1991 and June 1994, almost 3 years. If you look at this period, after the Lehman crisis, there was a sharp drop, then a rapid rebound, and then it kept declining. This reflects the inflation. These are the top 100 companies by market capitalization. But the problem is that this time it has dropped for over 2 years. However, this time it has only dropped for about a year and 2 months. So it was about to fall, but the government intervened as a special measure and lifted it. If you look closely, I saw that Kim Ki-hyun mentioned that after the first rebound adjustment, there would be another rebound followed by another drop, and I think it's the same. What this means is ABC. It's the A wave, B wave, and C wave, so a wave, B wave. Here we have an A wave and a B wave, but if you look closely, you'll see that the rebound from the A wave is much sharper than the initial rebound. This is from when I was writing the book, so it's from July. Now it's August, and it's much higher than it was back then. A month has passed, so both July and August have increased. However, there was a sharp rise in June, July, and August. I see this pattern as a 3-year rebound. This is a 1.5-year rebound, and if we consider the same period of decline from here, it would be around August. So this is about 1 year and 5 months. After 1 year and 5 months, it would roughly be around August 2014. If you look at this closely, this is the market capitalization of the top 100 apartments adjusted for inflation. Many individual apartments have also reached their previous peaks. However, you can see that initially the rebound was weak, then it adjusted, and suddenly it rose sharply at this point. This month has seen even more increases. What kind of pattern is this? If you look at it, it initially rebounds, then it weakens, and finally, it rises sharply. This is related to the fishing rod theory. When fishing, the fish are contemplating whether to bite the bait or not. But when you shake the rod vigorously and then suddenly pull it, the fish come to bite. Right now, this is what happened when the large forces created a rebound market. It's like a rabbit hunt. Using the media for the rabbit hunt, as I wrote in my book, it's fear marketing, followed by cancellation marketing. The stress of the postponed event, which was delayed for 2 months, suddenly caused people to flock to it when it was rescheduled for 0.8. Then, the pre-registration for the new city in Samgi was abruptly cancelled. So it's like saying, don't wait for that, just quickly buy my apartment. I see this as a huge conspiracy. Are we getting caught up in this? Most people are getting caught up in it. They lost money in stocks. After waiting and waiting, when the prices started to rise a little, those who didn't buy ended up chasing after it at the last minute when it surged. Right now, even real estate experts are caught up in this, aren't they?
I think many semi-experts might be caught up in this. From my perspective, it's serious. If we look at this chart, if a rapid and urgent drop in the Korean won occurs, similar to the significant decline during the IMF crisis, it could potentially hit a bottom around 2026 and then start to rise, right?
It's because the period hasn't been met. So there are declines, but there's also the duration. We refer to the highs and lows as level theory, and the duration of time is important, meaning how long it has dropped. Just like in the past, this is 8 years. This is 6 years. Then it has to go at least 6 to 8 years. If the government had left it alone this time, it would have dropped for about 2 years, rebounded, and then dropped again, which would have led to a strong rebound like in the past. But this time it seems different. It feels too artificial, and what I think is that since this is the last wave, they are trying to offload their inventory. Especially this time, the government has been rolling out measures and stimulus packages, but speculative forces won't be able to enter at all. It's all young couples, newlyweds, and people in their 30s and 40s, as well as first-time buyers. This is because speculative forces buy and then sell after about a year. Even if you sell and make 100 million won, after paying 80 million won in commissions and taxes, you end up with only 20 million won, right? But if you feel it's not working out after just 6 months, you cut your losses. When you take a position, there's no capital gains tax, so the costs are lower. However, if this huge force drives the market up and sells a lot over a long period, but speculative forces come in, they can ruin the market, because if they sense trouble and just cut their losses, they might find themselves in a situation where they can't sell and the market suddenly collapses. First-time homebuyers, newlyweds, and families with newborns, these are the true demanders. Even if they face difficulties, they won't sell. Are they going to live off interest? There are lies involved, and I believe that this will play out this time. This is because the market has peaked and declined over the past 34 years, so we shouldn't rely solely on past standards. I think there could be risks greater than those from the Kim Young-sam or Lee Myung-bak administrations. Right, and now, as you mentioned, the major trend is ending now, right? Then I see this minor trend lasting at least 6 years, usually around 8 years. This is because there are many 8-year cycles in our country. So, the ABC waves I mentioned earlier will be represented in a reduced form here. Interestingly, from May 1991, there was a decline for 3 years. Then, during the AB phase, there was a sharp rebound after 2.9 years. It's exactly 3 years until the peak, so if we consider 3 years and 2 months without sleep, that would mean around August or September of 2021. Normally, you would either let it drop for 3 years or let it drop for about 2 years and then keep it for a year and a half. However, this time the government intervened too quickly. As a result, it rebounded in the middle of the drop. This leads to more after effects. Because if many people get stuck in a situation where it has dropped significantly, the after effects are, in my opinion, much more severe. The time when people who receive special treatment face forced selling is the bottom of the stock market in our country. In terms of that, people hold on until the end after getting caught at the peak, and then they end up with forced selling at the last moment. They get hit hard, so they think, oh, this is an exception, it's fine, but that's absolutely not the case. There are plenty of instances where people have enough of their own money, but a few individuals can collapse 3,000-unit apartment complexes, which is equivalent to collapsing one apartment through extreme leverage. When that happens, it drags down the asking prices as they sell off. I believe that in the worst-case scenario, if you look closely, the bottom during the IMF crisis and the Lehman Brothers crisis, and the bottom in 2013, there were many asset crises during those times. But this time, there was absolutely nothing at the bottom. It just went up without any signs of coming down. Then, instead of showing signs of a downturn, the market rebounded sharply. However, looking at past cases over the last 60 years in our country, we saw similar situations in the 1970s. Such phenomena indicate that a real bottom occurs only when there is a significant social catastrophe. So, it's a bit unfortunate. Because of that, I keep warning people not to overextend themselves financially. And I even pointed out that there seemed to be organized forces involved in certain areas, which led to a frenzy among those who were overextending. It's extremely dangerous. That's right, exactly. After saying that, now it seems like they haven't recommended any apartments in the Nodogang area, while claiming that a 6 billion won apartment in Apgujeong has risen by 700 million won, and that a 40 billion won apartment has become 48 billion won. Viewers, even while watching YouTube, people buying apartments worth 6 billion won don't even refer to YouTube. While they look at apartments in regions like Nodogang worth 750 million or 500 million won, it's unfortunate that there are far fewer representatives like Kim Ki-hyun who broadcast with a sense of responsibility, considering that these ordinary people are watching YouTube broadcasts.
So I think it's like this. In a way, this video might be very uncomfortable for those who have heavily invested. Yes, but the important thing is that anyone can be wrong. I can relate to that. I can be wrong, and our friend Ellen can be wrong too. But the key point is whether there is sincerity or not. For example, I felt this a lot while reading a book recently, but a significant number of people have their own. Incentives are very much interconnected. Because if I own real estate, do YouTube and give lectures, I have to say that real estate is going up for it to sell well right now. So I keep saying that it's going up. But in my case, since I run a real estate platform, I really have to say that it's going up. However, I don't say that. And I personally think that Elliot is truly excellent, regardless of anything else. We are discussing this, and as far as I know, Elliot is not only focused on real estate, but is also an expert in the securities field. I understand that he has made significant profits from currency exchange as well. Therefore, while those who are heavily invested may feel uncomfortable, he is someone who puts all his assets on the line and takes action. I believe that the information he shares is definitely worth your attention and consideration, and I think the truth will eventually come to light. I often mention this on my broadcasts. Wait for a short period of 1 year, or a longer period of 2 years. I believe that who the real experts are, and who is genuinely telling authentic stories for you, will become clear